All right, guys, this is going to be a Q&A in regards to starting a small business and anything related in real estate. It's going to be pretty broad, but we're going to just hammer out some questions that have been asked and just kind of get them out to you. All right, the first question. Well, how do you get started? I mean, with anything, it's really an action plan. Ideas are a dime a dozen, and people always, say, well, I had this idea and then somebody else did it. Well, the reality is an idea is nothing until you implement it. If you don't implement your ideas, they are just that. Everybody's got good ideas, and everybody has $1 million idea for sure. People even have $1 billion ideas, and they just don't follow through completion or go through that, because really the trial in starting anything is implementation. So, I mean, if you have an idea of what you want to do, but you don't know how to get started, I mean, the first thing I would do is just start writing down what you think you need to do. I mean, obviously, if you're starting a company, you're going to need a corporation, right? So if you don't know how to do a corporation, Google lawyers and be like, well, hey, how do I sign this up? There's a lot of good online portals or let's say facilities that just help you, get from point A to point B, like literally as simple as filing a corporation. And okay, does my name go on this, or do I have another company own it? I mean, when you're starting out, there's sole proprietorships, there's corporation, there's limited liability. There's a lot of different ways, and depending on if you're in the United States, Canada, they all have different rules and stuff. But I mean, the best way to get started is to actually take action. And if you don't know the next step, like I said, even just filing a corporation, well, Google lawyers or someone who would actually know, and they can tell you the first steps. You can know what that's going to cost to get done, and that's probably the best way to get started. From there, obviously, you're going to write down your ideas and what you want to work on first. I mean, I really believe, like, if you're starting a service or product, you're going to need to have some form of marketing to back it up. Now, that doesn't mean you need a large budget. Most of the companies I've started up, we literally did this by putting out door hangers. So if you're going to pay to get some door hangers printed, well, there's no reason why you can't go out and put those door hangers on the doors, right? And another big thing I think is reading. Anybody who wants to start a business, start reading about business books and how they started, because you're going to get it from them first. You get it from the source first, and you're going to realize it's not quite as difficult as you might think. And the more you do it, the more you're going to learn. You're going to become an expert at it. You don't just start handwriting without practicing. You're going to start handwriting, and well, I still don't have enough practice in that field, but at the same time, anything that you do, you're going to get better at. So the first time you do it, you're going to go through these learning curves, and then the next time you do it, you're going to do it a lot quicker and more efficiently, because you learn what the right ways and the wrong ways to do things are, because you're going to have stumbling blocks no matter what you do. So the best thing you can do is take action. And that's in anything. Like I said, if you don't know how to start a corporation, you can look that up. If you don't know anything about marketing, Google cheap marketing ideas and different campaigns that you could do that are not going to break the bank, because one of the biggest holdups to people starting anything is like, I don't have the money to do it. And quite often, you don't need a lot of money to start any business idea. You really just need some sort of implementation that's creative. Money doesn't hurt, but most people don't start with money when they're starting a business. So that can't be the main focus. I need to raise money, because it's also difficult for you to get money if you've not shown that you can do something before. Another good thing too, if you're looking for customers, I mean, what you can also have people do is sign up on a customer basis based on, hey, this is a service or product that I'm going to offer. If you are looking to raise capital, and you can get some tentative agreements with no money down or anything, saying, hey, look, this is my customer list, and if you wanted to go to a bank to take out a small loan, or any of the different lending sources out there, if you have something to back it up, with a business plan, again, 1 million templates online to show you how to write a business plan. But there's just so many tools out there, and Google and online searches are really going to help you with any of this. And literally just type in exactly what it is you're looking for, and I'm sure there's going to be somebody already online who's there to answer that question for you. So hope that answered question number 1. All right, now the first thing you want to do after starting your business, so a lot of this takes on from the previous question, but it's really hit the pavement running. Like, say you have a landscaping company, and now you've got a couple pieces of equipment. Well, what are you going to do? Well, you're going to start knocking on neighbors' doors. You're going to start putting door hangers out, or you're going to reach out to any network that you can, maybe even commercial clients, to start saying, hey, this is what I do, this is my product, this is what I offer. Now, obviously, I'm talking in a small business stance, so this is at the point where you're doing everything. You're not hiring your other staff yet. This is all work you've got to do. And the reality is, at the beginning, you are going to be doing all the work yourself. Until you figure out the kinks, until you figure out your pricing and what things are going to cost, you really want to as well, too. Otherwise, you're not going to be able to implement things at a larger stage. So now is really where the sweat equity and everything comes in. If you got a cute website, and again, if you're like, I don't have the money for a website, okay, go to Fiverr.com and see. You'll have people that can do templates for you for $50, 25, the more you do, generally the more value you get if you're spending more money, but it doesn't have to be expensive, right? It's not expensive to buy a domain name. It's not expensive to file a sole proprietorship. These are things that you can do on like a lean startup, great book by the way, kind of basis, so that you keep your priorities in check and know that you're not just like extending yourself to the maximum when you're starting a business, and can grow it and mature it from there. So biggest thing to do after you start a business is hit the ground running. You need customers, you need clients. That's the lifeblood of your company. So what do you do to get those clients? And that should be your focus. Now, this is where people go a little bit wrong. I find that your product or service is always going to improve over time, or it should. Sometimes they deteriorate, but you don't want that to happen to you. So at the end of the day, some people don't really know how to get clients, or they're a little nervous. They don't want to knock on a door. They don't want to ask people for business. Well, that's a little bit of a problem that you got to get over, because everything else can be improved from there. But you want this initial client list to start running your business. And if you focus on everything outside of the clients, then you're gonna have all this supporting stuff, and you might look great, but then you have nobody to sell it to. Whereas if you start with a product, start with a service that's good, and then start getting it out there, you can improve while not having to, risk losing the business because you didn't have any clients to begin with. So, hit the ground running, hit the pavement, reach out to clients. That is the lifeblood of your company, and then from there, continue to improve your service and product. As a GTA resident, why do I invest in the submarkets in Ontario? And that is a great question. Now, there's actually a philosophical reason behind this. I mean, when I first started, quite frankly, it was really the only places I could afford, but I'm a big Rich Dad Poor Dad Robert Kiyosaki fan, read his entire series several times, and many other books that follow up from that and go more in depth in terms of investing or construction or anything like that. And the big reason for me is that in Canada we have a housing crisis that a lot of people aren't really aware of. They see rising prices in the GTA, they see rising rents, which are all a factor because of that, but really we have a supply and demand issue. We have about 2% vacancy anywhere you're looking in Ontario, and we are just not building as many homes as the immigrants that we are bringing in. So I believe last year, not verbatim, but we had about 200,000 scheduled units to be built in all of Canada. Well, we were bringing in 350,000 documented immigrants a year. So if your vacancy rates are already low and you're bringing in that many, you can see where the problem happens. We are, I like to say in Canada, the most developed, underdeveloped nation in the world with the second largest landmass. We have the most precious resources, and that is something, if you look at Canada as a whole, as a business, it's got so much opportunity for growth. And really what we're doing in these submarkets in the GTA is, number one, we're buying homes under the price of actual build, which means, just because a market hasn't gone up in 25 years doesn't mean that it never will, and it doesn't mean that, there's a lot of things wrong with it. It can, not have as much economic stimulants as some of the Torontos or Vancouvers in Canada, if you will, or the major metropolitan cities that have a lot of just businesses and everything and revenue flowing around. Like these ones are kind of like the outskirts cities, right? And you have this in every major metropolitan. I mean, if you're going to Washington and you go outside to Washington, D.C., there's some areas that are a little more, let's just say prone to recessions and just have less economic activity. And I feel like bringing that out to those cities is really a net benefit for everybody. Another big philosophy of mine, again, is that like if you look anywhere in North America, the economy is really dictated on real estate. Like in Canada, real estate is with $6 trillion, $7 trillion market, right? So that's the biggest market we have, quite frankly. And if you go to a city and they're under the price of build, let's say, you got to do your research in depth of where you go, but say a builder can build something for, $300 a square foot, and a $2,000 home is now $600,000. Okay, great. Well, if the home is $200,000, well, that builders can't go in there and build. So this is, a double-edged sword, because now builders don't want to go there because they can't sell for the actual value that they think they can get to be profitable and grow in that industry. But it also, affects the economy there as well too, because now nobody else is really making any money on their real estate investment. And we have very high home ownership in Canada. It's around 68%. It's above 65%, which in first world nations is extremely high, because this is most people's number one asset. It's their number one investment. But if you owned a home for 25, 30 years and the market value didn't go up, you're technically losing money on your home if you're looking at property taxes, insurance, and everything. And I think that bringing economic activity out there, because when we go to buy properties, we do a lot of work. We're renovating them, we're raising the value of them. And it helps kind of bring out in a smaller form, a recessionary environment in that, or take away from a recessionary environment in that city. If the cost of homes are under the price of build in any city in North America, then you're gonna have a little recessionary environment, if I'm using the right words here, but you're gonna have a little bit of a depressed economy just because they're not keeping up with everything else. So that's one of the factors. And the other thing is also more units. Like in Niagara, for instance, there's 14,000 people on a waiting list from the Niagara Board, where the government's actually subsidizing rental income, and they can't find units for these people because there's not enough density, there's not enough good units out there. And it's really something that's good for the economy in general, but we need more people building. So although I'm not going in there and building 40, 50 units in a city, although this is needed much more than people realize, when we go and do our conversions, like single family to a duplex, or taking a 40 unit to a 60 unit, or whatever it might be, you're really benefiting the city in many ways. Obviously, there's increased property taxes, increased property value, which is great for the city to continue to hire more internally. And then it's also great for the residents who own, and have been kind of caught in that, not downward spiral, but flat spiral, which inevitably is downward, because at the end of the day, if something is not rising at the rate of inflation, then it's falling behind everything else. Like incomes, people know we have an average of 1% income rise over the past 60 years. Well, that's not keeping up with inflation, which is why people's spending power has gone down. But assets continue to rise at inflation or a little bit more. So I feel like if there was a little more knowledge in what assets to invest in outside of stocks, there's nothing wrong with stocks, bonds, anything like that, but to really people to get their own self-education on what an asset is and how to develop long-term wealth or sustainability, because I don't believe we're going to be able to rely on pension funds and whatnot in the future. And that's probably a good thing, because you don't want everything to be controlled by a source, and there's enough information out there now where people can make those changes, especially with millennials and people not already gearing up for retirement, just because they're not going to have the same I don't want to say safety nets, but the whole structure of the way things are done now is completely different. So back to my original question, the reason I invest in these areas, because I think it's actually very good for the economy. We are able to cash flow on the completed value of homes from rental income, as opposed to just being a capital appreciation pay down, because the cap rates are higher in these areas where the market has just not gone up quite as much. And again, the vacancy rates, we're dealing with very similar vacancy rates. So you don't have a problem finding tenants. There's a need for it. It's a huge supply and demand issue right now. There's a huge need for that. So the factors of high vacancy rates are just not relevant. They don't exist. And what the best thing you can do is, go to these cities, in my opinion, and kick out the bad landlords, take care of your properties, have amazing properties out there, and it just helps raise everything on a whole. So I invest in the submarkets in the GTA because that's where I think it's needed most. Setting goals is always a work in progress. They change from time to time, and really the best way I do to set out my goals for myself is I say things that are completely unrealistic to myself first. So if I think I can double this next year, I go, you know what? No, I'm gonna 10x that. I'm gonna Grant Cardone it. I'm gonna do something like that and push it to another level. And then if you start saying it to yourself, eventually it's gonna come out in conversation. Then you start saying it to other people as well. And if you're somebody that holds himself accountable for his actions, then that's what you're gonna work towards regardless. So I put it out there, and typically that's generally what happens. And I always say to shoot much higher than you actually think is reasonable at first, because the reality is like, you're not always gonna hit your goals, and they're not always gonna be on the same time, because you don't know what bumps and peaks you're gonna hit on the way to that. You just don't. And if everything were that easy, then there would be a clear line to get here, to get there, and everybody would do it, and there'd be no adversity, and we'd all live forever, it'd be sunshine and roses, and everyone would be worth billions of dollars, and you wouldn't have to worry about anything, and there'd be no problems in the world. Unfortunately, that is not the world we live in. It is, there's levels to this, and whenever hitting a goal, you hit some new boss before you hit that goal that you're gonna have to kind of work your way around or do something. That's just how it works. That's how moving upwards, that's how plateaus get moved beyond. And like, again, you can equate this to not just business, but personal fitness or family relationships, anything like that. Like you're gonna have obstacles no matter what. If you're trying to push for something further, you gotta fight for everything that you're doing, really. So I would say set unrealistic expectations for yourself and hold yourself accountable, because if you say, hey, I want to grow by 10% next year, right? And then you grow by 5%. It's not quite as motivating. If you say you want to grow by 1,000% and you grow 700%, you're not going to be too upset, and it's still going to keep you fired up and hungry. Another thing is, if you're able to shoot past the goals that you had for yourself unexpectedly, and this happens sometimes, right? Maybe you get I don't want to say a break, but you worked hard towards something that led to something else. Like the big thing is like, you don't want to be undermotivated either. So if you're easily able to shoot past your goals and you're limiting yourself with that, well, then you're going to limit your day-to-day. you're gonna go, well, I only expect to do this and we're already ahead of schedule, so I'll lean off the brakes a little bit. I'll take more time off, I'll do this. And then that's when problems start to arise. That's when you can lead to a lot more issues happening. You gotta be consistent with what you're doing. You gotta shoot very high expectations for yourself, and then you gotta hold yourself accountable. How do I gauge my growth? That's, again, a developing question. There's so many ways to do it. You can look at straight revenue and go, okay, well, my revenue grew, so this is good. You can look at net profits, but then if you're totally focused on net profits, you're probably not reinvesting enough to continue to grow at a good rate. I'm not as concerned about the net profits on a company in regards to actually saving that capital. What I do like to do is obviously reinvest in everything we're doing and grow more. It's more of an infinite mindset than it is to a specific, dollar amount or figure or anything like that. So I gauge my growth on a number of different ways. Like really, I've been, like 2019 was more infrastructure based than anything. Like who are the people around me? Are they happy? Do they know what we're doing? And are they on the same page? That was a big way, like that was my biggest growth. We obviously grew a lot in almost every single area this year, but my best part was really trying to help build out that team. And that's where I kind of measured the growth from as well too, because that all has an underlying factor in your growth. If you have some people that are not getting along or driving with other people, well then it's gonna create a rocky road down for you. And if you have people that get along, you're creating like a harmonious environment, then you're gonna be able to grow from there. So obviously, I judge my growth based on real estate acquisitions, and the more we're growing, and then the more completed homes, and obviously more revenue coming in. These are obvious factors, but one of the biggest things for 2019 where I saw the biggest growth was definitely in the infrastructure and the way that we handle things. And that's something that I'm going to continue to focus on, because I think that's really the most essential part to building something long lasting and something that can grow over and over, right? Like, when you're a small business, you're running all by yourself, and you don't have any time for any crap, right? But as you start to get a little more mature and bigger, the more pieces you have to the puzzle, the more you're gonna have to make sure and manage that those pieces are aligned and you're on the same page. So, you can value your growth in many different ways, but depending on the year, it might be different. For me this year, it was about infrastructure and the team around it. That's what I really valued most, despite having growth in many other areas. That was a big one for me, and will be a big one in 2020 as well too. So. Thanks for watching this, guys. This is going to be my outro video. Again, message in the comment section or send messages if there's anything that you guys want answered. We do answer them and we put them back out there. So basically anything relating to real estate or business, small business, medium business, anything in that realm, I'm here to try and help you. So let's get her done.